Looking for some fantastic long-term investment opportunities? Want safe, growing, totally passive dividend income that beats the market? Would you like to know my top 5 stocks for November 2021? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason FIEBER has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, if you want exclusive access to my personal 6-figure stock portfolio and alerts on any new investments I make, check out the Patreon link in the description below. I focus my videos on and personally invest in high quality dividend growth stocks. Perhaps the better question might be, why not? These are some of the very best stocks in the whole world. They represent equity and world-class businesses that pay reliable rising dividends. These are, quite frankly, the companies that make the world go round. And in doing so, they make a lot of money. Money which they share directly with their shareholders in the form of safe, growing dividends. That said, not all dividend growth stocks are good investments at all times. Which brings me to the point of this video. Today, I want to tell you my top 5 dividend growth stocks for November 2021. Let's dig in. My first dividend growth stock pick for November 2021 is Allstate Corp, stock ticker ALL. Allstate is a property casualty insurance company. This $37 billion by market cap company operates in one of my favorite industries of all, insurance. Insurance is fantastic because, first of all, it's often required by law. That's a captive customer base right there, with a 3.6% compound annual growth rate for revenue and a 28.9% compound annual growth rate for earnings per share. Over the last decade, this company just continues to spit out great growth, despite it flying way under the radar. Guess what great business growth means? Great dividend growth. Allstate has increased its dividend for 11 consecutive years. Honestly, I think they're just getting started. The 10-year dividend growth rate of 10.2% is impressive enough. However, their most recent dividend increase was a whopping 50%. On top of the growth, the stock offers a market-beating yield of 2.6%. And with a payout ratio of only 25.9%, this dividend is positioned incredibly well to continue growing at a very high rate for years to come. This stock is up 14% on the year, but I think there's plenty more where that came from. I analyzed and valued Allstate in early October, showing why shares could be worth nearly $150 each. This name is currently at under $124 a share, so there's a lot of potential upside here. And while you wait for that upside to unfold, you're collecting that market-beating yield, growing at a double-digit rate. My second dividend growth stock pick for November 2021 is Atmos Energy Corporation, stock ticker ATO. Atmos Energy is an American natural gas utility business. With energy shortages across Europe and Asia playing out over the last few months, a basic truth has suddenly dawned on people. Our modern-day society cannot function without cheap, reliable energy. That's just reality, and Atmos Energy, with its $12 billion market cap, is involved in providing cheap, reliable energy to millions of people, primarily in the state of Texas. While revenue is down over the last decade, largely due to a number of business sales and restructurings, earnings per share has grown at a compound annual rate of 8.9% over that time frame. And Atmos Energy is all too happy to share that growth directly with their shareholders in the form of a safe, growing dividend. Indeed, they pay a large, growing cash dividend straight to their investors. They've increased their dividend for 37 consecutive years, which makes them a vaunted dividend aristocrat. The 5-year dividend growth rate is 8.1%, which is in line with earnings per share growth. Plus, the stock offers a rather appealing yield of 2.7% here, which easily beats the market. And the dividend is protected by a moderate payout ratio of 47.3%, indicating many more dividend increases to come. This laggard is down 2% year to date, but I think that's where the opportunity might be. If you bought this stock a while ago, that performance is a bit of a bummer. But if you're looking to buy now, that existing shareholder pain could be your gain, since it gives you a cheaper price to buy in at. I analyzed and valued Atmos Energy in late October, estimating that the business is worth nearly $107 per share. With shares trading hands for about $92 each, that potential gap between price and value could be a gift. My third Dividend Growth stock pick for November 2021 is Digital Realty Trust Inc., stock ticker DLR. Digital Realty Trust is a global real estate investment trust that owns and operates data centers. You know what I've never heard anyone say? That humanity's future is going to be less reliant on technology. Data centers have a huge role to play in that future, and so Digital Realty Trust, as a major owner and operator of said data centers with a $46 billion market cap, is positioned extremely well to grow its revenue and profit. Already, the revenue sports a compound annual growth rate of 15.6% over the last decade. Funds from operations per share has a compound annual growth rate of 2.6% over that time period, even with an abnormal 2020. Data centers or dividend centers? You be the judge. Data centers have been money for this company, and they've been money for the shareholders too. The company has increased its dividend for 17 consecutive years, with a 10-year dividend growth rate of 8.6%. Along with that high single-digit dividend growth comes the stock's current yield of 2.9%. You're getting a yield and growth combination here that's well into the double digits. The payout ratio at 71.6% shows no signs of the dividend growth letting up either. The stock is up about 17% this year, but the valuation still looks reasonable. I don't see anything expensive about this stock, despite the compelling business model and strong dividend metrics. I analyzed and valued Digital Realty Trust only weeks ago, showing why shares might be worth about $155 a share. Well, this name was priced at less than $148 a share when my video came out. It's had a nice pop since then, and we're now at about $158 a share. Still, it's a great business model, and you could do a lot worse than pay a fair price for a business like this. My fourth Dividend Growth stock pick for November 2021 is Gilead Sciences Inc., stock ticker GILD. Gilead Sciences is a biopharmaceutical company. Gilead Sciences, with its $81 billion market cap, gets no love from the market. However, love can be expensive, and as Warren Buffett once said, and I quote, "You pay a very high price in the stock market for a cheery consensus," unquote. Despite the lack of love for the stock, the business continues to march forward and grow. They've increased revenue at a compound annual growth rate of 12.8% and earnings per share at a compound annual growth rate of 16.7% over the last decade. These are great numbers. Those great numbers translate over to the dividend too. Gilead Sciences has increased its dividend for 7 consecutive years, and the 3-year dividend growth rate is 9.4%. That's nearly double-digit dividend growth, and the stock offers a yield of 4.4% here, which runs circles around the broader market's yield. With a payout ratio of 40.1%, I see this dividend headed even higher. The stock is up only 8% this year, despite very good results from the business. The business continues to do quite well, even while the stock doesn't. That business stock bifurcation is precisely why I'm highlighting it. If the stock were expensive, I wouldn't be talking about it, and investors would be complaining about overvaluation. Instead, the stock looks cheap. My recent analysis and valuation video, which went live only a few days ago, showed why this name could be worth about $75 a share. Shares are now trading hands for less than $65 each. This unloved Dividend Growth stock might deserve a little more love than it's getting. My fifth Dividend Growth stock pick for November 2021 is VF Corp, stock ticker VFC. VF is a worldwide apparel and footwear company. Even though this is a $29 billion by market cap company, VF is definitely not a household name. However, many of its brands are. Think Supreme, The North Face, Timberland, and Vans. I imagine a lot of companies out there would love to have just one of these brands. Now, revenue is flat over the last decade, and earnings per share is down by nearly 50%. However, that's due to the pandemic effects and a major spinoff. Meanwhile, CFRA is predicting that VF will compound its earnings per share at an annual rate of 31% over the next 3 years as the business fully recovers. We invest in where a business is going, not where it's been. Of course, we also invest for those juicy dividends. And juicy is just what you get here. VF has increased its dividend for 48 consecutive years. That's pretty much unheard of in the apparel space, where trends come and go like the wind. The 5-year dividend growth rate of 9% is paired with the stock's current yield of 2.7%. I like that combination. I also like the payout ratio, which is 61.3%. This is another dividend that's positioned to grow like clockwork over the coming years. This name is down nearly 15% this year, and I think the market is getting this one totally wrong. But would you rather pay more than less for the same stock? Of course not. The combination of high quality and low valuation is why we're here. I analyzed and valued VF about a month ago, showing why shares could be worth almost $77 each. When that video was released, shares were going for about $68 each. The stock is now priced at nearly $73, so it's had a nice run, but I still view it as undervalued. Meanwhile, the company is poised to benefit from the sudden surge in demand for white Vans slip-on shoes stemming from Squid Game mania. The shoes are hot, the stock could soon turn hot too. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these top 5 dividend growth stocks for November 2021. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the FIRE Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who've been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.